Hello and welcome to this Property Master webinar.
A lot of you were asking for a recording of our last webinar. We couldn't actually use that recording, so we've decided to put this together for you. It's about 15 minutes of me. My name is Chris Tucker. I look after communications for Property Master, and I shall be putting our Chief Executive, Angus Stewart, on the spot, asking some questions about what is actually going on in the housing and the mortgage market now. So, hi, Angus, welcome.
Good morning, Chris. How are you?
Fine. Well, I'm going to start with that question, really. We've had the lockdown. We now have the unlocking. So what exactly is happening in the housing and the mortgage market now?
Well, as you're aware, when lockdown happened, we had many lenders pull out of the market completely, lots of products withdrawn, and it was impossible for surveyors to go and value properties, which became a major issue because I think there were 400,000 properties which needed surveying, which couldn't be accessed. So what we're now seeing is that some of the lenders are coming back into the market. Surveyors are able to do some valuations, but observing social distancing. And we are seeing new products coming back on, but they're slightly higher rates, slightly different criteria to those that were being used before.
So there's quite a lot going on. This issue with surveyors came up a lot because we did have quite a few questions from clients, and Steve was asking what was the impact on high-rise apartments where a survey probably was needed, particularly when you think about issues around cladding post Grenfell. So if you're buying a property like that, has that blockage now been removed?
Yeah, to a large degree, yes. I mean, what lenders did during the lockdown is they tried to put in a system of sort of desktop valuation for, shall we say, more standard properties, and that worked relatively well. But anything which is non-standard, and by non-standard, I think they were looking at the flats they're talking about, HMOs, larger properties, so properties with a valuation, say, of over 500,000 or $1 million in London, all required the surveyor still. Of course, they put all those on hold. And now surveyors can go in and do valuations, but they need to observe social distancing. So it might be that the occupants of the property need to leave for half an hour or so whilst that valuation goes on, or at least be in a different room from the valuer. And so we are seeing it is possible to do some of this. What we are hearing from some lenders is that you can't have the more complex home buyers reports or detailed surveys because they just haven't got the time to do that at this, whilst they try and catch up.
That may be an issue then for HMOs, because again we had some questions from clients about why is it difficult at the moment to get a mortgage for an HMO. Was that also an issue with valuation?
Oh, absolutely. With HMOs, you want the surveyor to be able to get into the room to make sure the rooms are, right size legally. And clearly, with no access, it wasn't possible to move forward on HMOs. So I think, the survey side of HMOs is opening up. I think lenders are probably going to be a little concerned about affordability on HMOs. One needs to make sure that the tenants can afford to repay those mortgages, and we're certainly seeing situations where some of those people who are living in HMOs, maybe the ones who've lost their jobs at the moment, or they're on furlough, and hospitality, retail, sectors which have effectively closed down and are still closed. So there could be some pressure on rents coming into landlords who've got HMOs.
Mm-hmm, mm-hmm. And you also mentioned about lenders leaving the market and then returning. We had a question from Grace who was asking, who are the lenders who are now coming back? And I know from talking to you, there are different types of lenders who were impacted in different ways. Perhaps you could explain that.
Yes, I mean, the good news is some lenders are coming back in. I mean, Bluestone are back in, I believe, and Foundation are doing stuff. But what suddenly happened was that those lenders who use institutional funds, and as part of their deal, they needed to survey the properties physically. Clearly, they couldn't do that, so they pulled out. They also had another challenge in that most of their debt, the amount they're lending out to customers is securitized on the capital markets, and those markets dried up, and therefore they weren't able to move stuff off their balance sheet, and as a result they were unable to continue lending. So they had this double whammy that was affecting them.
But they're now coming back, so that's good news.
Yeah, I'm not so close to how the capital markets are working with securitization yet. Certainly some of the lenders I know who are trying to do that aren't operational yet, but I'm hopeful that over the next few weeks, we'll see some of those come back in as well.
Okay, and you also mentioned about tightening up. We had a few questions on that. In fact, John was asking about minimum income requirements increasing. Is that something you have seen?
I haven't seen minimum income per se being changed by different lenders. I mean, we still have a lot of lenders requiring £30,000 minimum income, some 25, but there's still lenders out there who don't have any specific minimum income requirement. What you do need to ensure is that you've got the affordability, and I think lenders are going to be more careful on affordability. And I suppose the other thing we need to give some thought to is, with surveys coming back in, the value of those surveys, the value of the properties maybe seem to have dropped. I mean, I think we are seeing a drop in property value, 5 to 10%, and that's clearly going to be that's going to ripple through in terms of how much that lender's willing to lend, because again, some of the higher LTV loans have been withdrawn from the market.
Well, that was a factor I was going to raise, and Hussein was asking actually about property prices falling and also about LTVs, because we did see quite dramatic drops there. Is that now going back to normalcy, or is that still an issue for, particularly if you bought a property with a small deposit and you're looking to remortgage, are you going to get the LTVs you would have expected before?
Well, certainly immediately on lockdown, many lenders, the maximum they would lend was 60% LTV. We're seeing it creep back up to 75% with quite a lot of lenders. I think it's unlikely we're going to get to some of the dizzier heights we've seen previously. So I would think 75 is a good working basis for most landlords. Beyond that, I think there's going to be very few lenders in the market, and certainly those that do will be at high interest rates.
Mm-hmm. Well, that was another factor I was going to ask you. So we've had quite a few questions on that. What is actually happening at the moment with mortgage interest rates? Because we saw our mortgage tracker has recorded rates falling for about the last year, 18 months. But where are they now? They're still going down? Are they up, or does it vary from deal to deal?
Well, we saw base rate drop from 0.75% to 0.1%. So you might think that rates would drop. They haven't on the whole. And if anything, we're seeing greater margins being taken by lenders. And that's to compensate them for what they perceive as the increased risk in this period of uncertainty. And uncertainty and lending in certain times always comes at a cost. So we're seeing, there are still some attractive rates out there, but generally the margins are increasing, and lenders have withdrawn the better rate products and more expensive products on the market now.
Mm-hmm. I also just wanted to ask you, so we had some questions, a specific one from Carol, who was asking about holiday lets. I mean, over the last few years, because of the tax and regulatory changes, we've seen landlords diversify their portfolios into different asset classes, like holiday lets, student accommodation and so on. I mean, taking Carol's question first, she's thinking about buying another holiday let, but wondering whether or not she will actually get a buy-to-let mortgage for that property. What's your view?
I think she's going to struggle, to be perfectly honest. Holiday lets clearly require you to demonstrate that you've got an income stream from rental to holidaymakers at a time when, as I speak, we still can't travel to many bits of the country, certainly can't go and rent holiday properties. I think a lender's going to turn around and say, how can you rent this property out when customers can't get there? I think she may be better off, at least for this year, looking at buy-to-let properties, and if she wants to turn it into a holiday let next year, that might be a better route. But I think holiday Airbnb stuff, it's not going to be something that a lender's likely to see as being attractive at this time.
And I guess you're thinking about, we're all reading universities now going online for their teaching. There will be landlords who've invested in student accommodation as well. So would you sound similar caution around that as well?
Oh, absolutely. I think we're going to see a lot of general moves to online teaching in student space, which will have a reduction in need for student accommodation immediately close to universities. We know that a lot of foreign students won't be able to come here for this next academic year. So I think student accommodation is an area where there's going to be some pain, to be perfectly honest.
Commercial property, probably similar?
Yeah, to a degree. I think we just need to look at the commercial sector. Sort of if it's retail, and sort of hospitality, I think there's clearly some pressure there. I wouldn't want to be in the on a restaurant, for example, at the moment. I think that'd be quite a difficult area to be in. Offices, lots of people have moved online with their meetings, are finding it works quite well. So is there going to be less demand for office space? Possibly. So I think on the other hand, warehousing, we've seen that there's been an increased demand for sort of warehousing and people doing internet distribution and so on. So I think it depends on the sector, but again, I think commercial, let's be a bit careful out there.
Yeah. Although, if we turn this around, we're now beginning to get to a stage where we're seeing speculation in the media and elsewhere about possibly this being an opportunity for some landlords. Do you think it could be? And if so, what sort of landlord, and how should you be getting yourself in the right position to benefit in terms of getting finance and so on, if you think there are deals there?
I think there could be some good deals out there. I mean, we've already talked about likely to be some softening of property values. I think there's going to be people wanting to sell, needing to sell. They could have been locked up with their spouse for the last 2 months. I think we can see a higher rate of divorce coming through as a result of some of the pressures. There's financial pressures on people. Many people have lost their jobs or currently furloughed, but risk of that just turning into losing the job in due course. We're hearing large companies making lots of people redundant. So I think there's going to be some churn there. So I think on the other hand, there's an opportunity to purchase property, probably at a discount to where it was, but you probably need to be in quite a good financial position to be able to pick that up. So if within your portfolio you can manage to remortgage but keep at the 75% level, you probably release some equity to do some further purchasing. But the one thing, sort of bit of guidance is, if you have been taking mortgage holidays from lenders during this period because you either do or don't have tenants or are unable to pay you rent, I think some lenders are going to turn around and say, well, if you've been taking mortgage holidays, you've clearly been under financial pressure. And if you're under financial pressure, we're not in a position to extend further debt to you. So a little bit of guidance. If you're able to ride the storm and not take a mortgage holiday from a lender, that is probably going to stand you in good stead. Because although the mortgage holiday won't affect your credit rating and the credit score, some lenders have specifically said that they would, not do further loans at this moment in time to people who've taken mortgage holidays, especially because that, as far as they're concerned, is an indication of financial pressure.
Wow, because I think a lot of people were reassured by statements from the government and others that there would be no impact, and the credit reference agencies in fact said that. But from what you're saying, Angus, lenders are factoring this in, and it is beginning to be seen as a bit of a red flag.
Yeah, I think lenders can understandably, they look at it and say, well, you as a landlord should be able to cope with a couple of months of non-payment of rent from your tenants. If you can't and you're demanding mortgage holidays from us, that indicates that you're under some financial pressure. If you're under a degree of financial pressure, why would we go and lend more to you? And so I think that's the simple logic that comes through. So if you've got the capacity to absorb, a couple of months or whatever without rent from your customers, your tenants, then that might be a better route than automatically assuming that the payment holiday is the better option for you. I think it really depends on what your strategy is, where you're trying to go. If you're trying to build a portfolio at this moment in time, try and avoid it. If you're comfortable with what you've got and you're not looking to take further loan at this moment in time, then maybe the mortgage holiday is sensible and reasonable.
But clearly we need to think that through. Well, that's really good. That's good advice. Well, thank you very much, Angus, and thank you everyone who's listening to the recording. Do let us know what you think, if you would like us to do more of this, and indeed if you have other questions you'd like to raise, you can always reach us at info@property-master.com. Thank you, Angus. Thanks for joining us.
Thanks, Chris. Cheers.